Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, Stan Harley will be our guest at the break today, which is nice. We like to hear what Stan has to say, but we're now we're in the sixth day of the rally, folks, based on what happened to the NASDAQ. Remember that it did the first one here. Let's just get up here and you'll see where we were. All right, this was back on the 13th. Okay, that's when it made its bottom, okay? And then the others made their bottom on the 14th. All right, so that's an important thing to keep in mind. Actually, I think, it made its bottom actually here on the 10th. So we've been rallying for 1, 2, 3, 4, 5, 6, 7, 8 days in the NASDAQ, and we're coming in to this important day here of the 21st. It's very important from my perspective, looking at cycles. Maybe Stan Harley has something like that. I'm not actually sure. But as we look at this is a long-term picture. Okay, this is where I think we could possibly be if we get there, all right? I'm not sure we will. We just made a small little Gartley right here just a few minutes ago because a beeper went off right there. And I should show you that because I will give you an idea. Let's just do the hourly because, the hourly will get it nice and clean. Yeah, there it is right there. There's a nice little Gartley. And if you blow it up, you can see it real easy, and this is what I'm doing over here is to try to show folks, how you can trade without risking very much. And actually, it's been a fun time here. I'm going to be here for a little while longer through this next few weeks here because I'm trying to help them to dig out of a hole that they've got themselves in. And so far, it's been pretty lucky. But luck has a lot to do with it, of course, But anyway, that was a perfect pattern that we had fulfilled here. We were a really strong buyer this morning. I'll show you that just a second here. There's what we're looking at. There's your expansion, 50%, everything it's got right now. It's got about a 40-point profit in it. But the early this morning, here was the best one today because was the market opened, as you can see here. This is Wednesday, okay? Now, this was in the middle of the night, okay? In the middle of the night, you had a really nice ABCD pattern form right here, which means now you have some higher bottoms in here, okay? So what we were watching is to see what would happen here on the open. And of course, the market made a move like this, and what we did is we had our orders sitting there to buy that on that 61% retracement, okay? And we'll get it right there. And you see it took off and went all the way up here, folks. Let me refresh this so that you can see it. We've had all kinds of data problems here, folks, just really bad ones. And not unusual here, I guess, but we'll see. Anyway, this is what we were looking for. And at that point, as you can see, we had the A, B, C, D to the upside, expanding up to this level right here. And we were able to, I didn't put any of these trades on, folks. I was trying to show them how to do it. It's better to teach a person to fish than to give a man a fish. But anyway, that's what we were watching to see how these numbers unfold here today. As a matter of fact, while we were on the air here just a few minutes ago, I was talking to you, and I wanted to bring this up because we had this one happening in the Dow Jones. Let's get this up here. Get this out of the way here. This was one last night. You see, you had a really nice move in here, okay, and then you had this move going up into here, and that's what we were selling here at 44230. It now has 100 points in it, and that's all we're doing. It's just trying to, and so far we haven't had any losses yet, but it's still early. Anyway, let's just draw that in so everybody can see what we were doing. It's hard to, when these people they're nice people, but they've never been exposed to the the mathematics of the market. They don't understand standard deviations. They don't understand ABCD. And it was really exciting to see them, because I've been here a couple of weeks already, and I'm here for some other reasons, of course. But it's worked out very nicely, and they're very kind, and it's enjoyable. And they think the world of TFNN. Some of them actually listen to the show all the time, which is good. Now, we got another one coming, folks. It's not going to be today, but by golly, tomorrow. Let's take a look at this one. We've got a really nice pattern coming here in natural gas. This is an hourly chart. If you'll remember, when we were on the air, we were selling that puppy up in here. That was a giant ABCD, and there we had the beautiful trade here. This was the best trade where we came down and dropped a huge amount here in 3 days. There was your 382 retracement right there, and then from that level, it kept going lower. I'm going to mention something here. I've spent a lot of time over the past couple of weeks here talking to you about what I see in the relationship between what happened in 1929 and where we are today. But if you stop and think of not just a technical picture of the market rallying up 8 days after the low and then rolling over, but back in that, remember, back in 29, folks, they had refrigeration, electricity. Refrigeration was why they were able to, keep the electricity to get the elevators and stuff working for the Empire State Buildings. That finished in 1932 at the depths of the Depression. So the reason why I'm saying this is when markets come down, they drop. They go down faster than they go up. And some of these have gone straight up. Gold, for instance. Gold's getting ready to just absolutely have a tremendous, a move down. My opinion, of course, but by golly, that's the way I'm looking at it. All right, so we'll get this out of the way here. And we have a trade set up right now that is in play. So let me get you up here and take a look at it. One of our favorites, it's soybean meal. So we're going to get the July soybean meal up here. And we're going to put the hourly chart up. And you'll see there's where we are. This is the July. Let's see, how much have we come down here? Refresh today. Hold on a second. Yeah, there's where we are. We're completing all the patterns that we expected it to do. And just get this up here. Now, this is a 60-minute chart. Okay, so we've completed just about everything that we wanted it to do. There's your A, B, C, D pattern finishing up right here. Hold on a second. Oh, you know what I have to do? I'm sorry, folks. I have to do the spot because we were doing the SM. So let me get that up. It comes around 297, as I recall. Yes, there's the buy right there, 297. It's just triggering right now. So that's why we're watching it so closely. We're buying. There's your fib number right there. Hold on, let me get this over here. Get this out of the way. There's your fib number right here. Okay, there's where you are. You got let's blow the ABCD up so we can see it nice and clean with the little jelly bean. Hold on a second here. And there's where we are. We're coming down. Hold on. So over the past few hours, let's go down to the 18-minute or 13 minutes so we can see it popping up. But the number comes in right here at 297, and we'll get it right there. And there's what we want to see right now. Okay, here's where we are. We're probably just a tiny bit below it right now, but I like this one, folks. I might be wrong, but by golly, I got to do them all. See how there it is there at 297. We're at 20 cents under the water here right now. Now let's blow this up on the daily so we can see where we are.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we're going to take a look at a few markets here. Let's take a look at the gold market because most of you know that I've been book bearish gold for quite a while. And as a matter of fact, let's get this up here on the daily. You'll be able to see why I am. Now, this is what's interesting today, folks. I was on the radio, so I did my, oh my gosh. Please stop it, Larry. Anyway, this is what I was trying to refer this on the video that I did early this morning. And you'll notice I said this is the area where you want to be looking to be short the gold because that's the 1.618 expansion. Okay. Now, the last time we had one of these, if you'll remember, going back, it was a couple months ago. Let's just do it because we can see where we were. There it is, I think. Yeah. Remember this one right here, folks? When we hit the 01, no, it was right here. We hit 1801. Okay, let's get there. It's where we hit 1801 that day right here. That was 1801, and we said right to the tick, 1801. Okay, and then the market over the next how many days was it? About 2 weeks. Yeah, 2 weeks. It only dropped from 2,800, 250 points down to 2535. Okay, now why is there some similarity here? And I like similarities, you know. Hold on. If you go from this high right here down to this low, what does that take you to? 1801 was the number. Now remember, this is they've because of the rollover, it's a little different. But we got the same situation going here today. Whether that means anything, I don't know. But you know, who knows? We'll have to wait and see. All right, let's take a look here at the crude oil. Now, crude oil has been under the weather here a little bit, but it's starting to show signs of some life. Now, let's clean out some of this because, you know, we completed that big ABCD up here. If you remember, let's just clean it out here to remind everybody that how ABCDs work. That's what I spend almost all my day today, well, every day, just talking about the only thing I know, folks, AB equals CD. And also that I'm right some of the time and I'm wrong some of the time. But I always have an opinion. Anyway, and it's usually wrong. Anyway, this is what we're watching here today. This was the high we made yesterday. We had the big move down. And where did it stop today on the 19th? You'll be able to see right almost exactly right here to this level right here. And then it's had a rally. So far, the rally today is now because, you know, this is the first big break since we went up to the 50%. nothing going on at that point, but we came very close. Now, looking at this on a really short-term basis, and that's what I try to do, is because when we do this pattern recognition stuff, it all started with Gartley and Mandelbrot looking at, really small time frames. Let's just get down to the 8-minute here in crude oil, and we'll see where we were. As we were coming down here, you see, I haven't updated because the data here has been missing here for most of the morning. And let's get that up there and take care of it. Yeah, there it is. Okay, so this is when it was making its bottom. So as you're looking at that on a bottom time, you want to go to let's go to a 30 minutes so we can see it just a tiny bit clearer. There's what I want to show you. Here's the area that we really want to be watching, because here's where the bottom was made. Now, how was there any idea that there was going to be a bottom? Okay, so if you looked at what happened here during the time last night, you'll see that the market had up moves and down moves and stuff like that. And then early this morning, okay, it had a pretty strong rally, about 70 cents, and then it came down here to make its final bottom. Well, if you follow the old ABCD pattern, that's what you want to be looking for, because that'll give you some idea of where you are. So you had your high right here, okay, and you had your low right there, and you come down, and that tells you right there. And look at this. Now, you're not going to be able to get that all the time. You don't know that. But look at this. You see this wide ranging bar right here? John Hill called this a yum-yum. And the reason why is when you have a market that's like this, and they retrace more than 78% of this, and he called it 80%, but the actual number was probably 78.6. But once you got above that, okay, just show you through. Once you got above that, which is right there, what does that mean? It means that everybody that's there it is right there. That would be the 786. It's just not drawn correctly because I have to raise it, and this doesn't do very well with that kind of stuff. But all right, well, anyway, when you get above this, that means that everybody that sold it here now has a loss, and then they start to cover, and boom, and away they go. And then we use rule number 1, folks. What do we have when we have a real strong trending market? Well, boys and girls, we rely on the old 382, which just happens to be right at the 50% this time. The difference here is only 10 pips. So if you bought it here, the amount of time you were at a loss was almost nothing. And what does that do? It tells us there's where you're going. There's your ABCD on this. And that's what the name of the game is, boys and girls. Mathematics, as they say in the trade. Now, let's just for kicks and giggles, we had another big correction right here. So let's just see if that one was the case. So we had this high right up in here. See, this was made first. This was made second, okay? So the high was here. The low was there. So let's see if it was close to a 382 on that larger range, because this was a bigger correction. So you just mark it up like that and bring it up here. Voila. There it is right there. If someone finds that in an Elliott Wave book, please call me, okay? I'd like to know. Anyway, 382 is where it starts. It all ends with all the other numbers that we look at, but those are the things that we're paying attention to. Now we got to cover a couple stocks here before we got our main man, Mr. Harley, up, the original bear. Hold on one second here, and we'll get up here. We'll take a look at Tesla because evidently I haven't seen it. Because they don't have anything about politics over here, folks. That's why I might stay for 3 or 4 months. I'm joking, but they don't really care about the politics. Okay, here's where we are. There's Tesla. Let's get the daily up and see what it's doing here. It had been trying to make a bottom. It's still holding okay. Yeah, it's still doing all right. Yeah, it's doing okay for the reason is that this was the 786 of the low way back here in May, folks. Excuse me, in April. That was the 786, and you can see it's been coming down since December. It wasn't a very happy Christmas over there at the Musk household. Well, I guess it was. Anyway, you can see it's been coming down. Now we're trying to make a bottom. The problem is, folks, is this. Oh, oh dear. This, if I'm right, and I hope I'm wrong, this, if we get this rally right in here into Friday or Monday, and it could stretch out a few more. Ideally, you got to watch for the number, and I'll explain to you why Then Stan will come up, and then he'll finish up the show. But this is what I'm looking at. Okay, this was 1929. This was in August the 8th. Okay, the market rallied up to September 3rd, broke down right here, took out the lows of the previous month, which we've done. We took out January, right? Then the market rallied for 8 days, stopping. Drum roll, please. 0.618, head and shoulders, left shoulder, head, right shoulder. And here's what we want to be looking at, because after that date is March 21st. So you want to watch what happens a day or two after that. Now, if it continues to go higher, then that's it. So the two factors are the number and the date. You got to have time and price together. But when we start this, and when we start this, this was an orderly drop. This one's not going to be orderly. This dropped 30%, folks. How many days? 16 days into the November 11th bottom. Rallied into October 1st, April 1st, and went down for 2.5 years from 383 to 42. Stay tuned for Stan Harley. We'll be right back, boys and girls, ladies and gentlemen.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Stan Harley of the Harley Stock Market Letter. How are you, young man? You're looking good over there.
Hey, Larry, doing awesome. God, I wish I had your good looks. I look at your picture and I'm going, wow, man, that is one handsome dude.
I was happy to get one day to the next, and that's all I have. But anyway, we've had a pretty big break here in the market. What do you see coming up, my friend?
Well, interesting market. Some parallels. I think your analogy to 1929 is pretty darn good. I like it. We'll step back here and kind of look at the big picture first and then step it down to the lower picture. It's my view, it has been and still remains, that we've seen a major market top. I've got a couple of slides to just review, and then we'll talk about where I think we're going here. This is a chart I've shown on the air frequently. This is a chart of the Dow Jones Industrials going back 50 years to the 1974 bottom. And what I found is all of the highs, as you can see with my mouse cursor, have been separated by a cycle that spans 150 months. So from the December 74 to the August 87 high to the Jan 2000 high. And then between the 2nd and the 4th, we had some Fibonacci perturbations that lined up, oh my gosh, exceptionally well. 2.618, 3.236, 3.618. I put all of those dots, or all of those points in the spreadsheet, did what's called a regression analysis, and it calculates a cycle of 150 months with a standard deviation of less than 1 month. Wow. And the analysis projected the next recurrence in the pattern for December 2024. And the Dow, as you and I know, and I was on the air with you on that day, the Dow topped on December 4th, 2024. Let's break it down to the weekly chart. Let's look at the S&P. And cycles that, and I failed to mention in the last slide, cycles that produce market highs, so very frequently have as their genesis point a market low. So in the last chart, for example, the cycle that produced all the highs had as its genesis point a major bottom. Now let's look at the weekly data. The same thing, a major bottom in 2009, and all of the major tops can thus be defined by a cycle spanning about 167 weeks. Here it contracted to a Fibonacci 0.691, but the 2.00 iteration, the 3, the 4, and the 5, and the 5th iteration, I calculated, this was done several months ago, I had it calculated for the week ending February the 21st, and the day of the high in the S&P was on the February the 19th. So what do we have here? We have what I call a classic rolling top. That is to say, I look at the components that comprise what I call the big five, the Dow Industrials, the Dow Transports, the NASDAQ Composite, the S&P 500, and the New York Composite. And early on in a bull move, we see all 5 of those going to new highs. But as the advance matures, we start to get a thinning in the advance, so that over time, weeks, maybe months, you see fewer and fewer components among the big 5 going to new highs. And that's exactly what we saw. Back in late November, transports peaked, the New York Composite, and later the Dow on December the 4th, the NAS on December 16, and then lastly, on Feb 19, the S&P topped out. And I think we've got all the highs in the rearview mirror.
Wow.
Now, let's break this down. Let's look at the daily chart. We've looked at the monthly, we looked at the weekly, now let's look at the daily. Well, a moment ago, I said highs frequently have as their genesis point a major bottom. Well, the opposite also applies. That is to say, cycles that produce market lows tend to have as their genesis point a market high. So it works in reverse. And that is exactly what has happened. Here's the high, the last intermediate cycle high that took place in July of 2024. And then we sold off. And as you can see, the major lows have occurred just looking, using the Mark 1A eyeball, I haven't done any number crunching, but you can see with your eyes the frequency of recurrence in the pattern. Most of the lows, as you can see, have occurred where not most, but all. This one occurred at a Fibonacci 0.382, the low on August the 5th. But all of the subsequent lows are evenly spaced by these bars, and these bars occur every 40 trading days. And I've talked about that on the air with you in the past. The most common recurrence of cycle lows on the daily charts are 40 days. That's the dominant cycle, a 40 trading day cycle. Not always. It kind of comes and goes, but over the long haul, over years, decades, the dominant cycle low on the daily charts, I have found, and I wrote a paper on this in the Foundation for the Study of Cycles magazine a couple of years ago, occur at 40 trading days. And as you can see with the Mark 1A eyeball, and I'll let the viewers do the math if they wish, but look where the next low is due to recur.
Wow. It's incredible.
Now, short term, what's going on? Well, we declined from the 19th of February into the 13th of March. That decline spanned 16 trading days, which, interestingly enough, happens to be Fibonacci 8 times 2. And moves, I found, Larry, diagonally on the charts, either from high to low or low to high, more often than not, tend to be a function of Fibonacci numbers and or their doubles. And so the market came down 16 Fibonacci 8 times 2 trading days. All right, where would the next high likely occur? I think it will occur either in the vicinity of 8 trading days off this low, or where's the next Fib number? 13. So 8 trading days off this low, plus or minus, could be 7, could be 9, but plus or minus a couple. But generally speaking, 8 trading days or 13 trading days. 8 trading days would be March 25th. 13 trading days would be April 2nd. April 2nd. Wow, that number seems to pop up a lot in the news lately. You know anything about it, April 2nd? Well, we might get 2 highs. We might get one next week, and then we might get another one on April the 2nd. I don't want to get too cute here and be too, shall I say, crystal clear, but I'm going to be alert to the prospect of either a single or a double or a pair of highs.
And stay tuned, folks. Stan Harley will be right back. You don't want to miss it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with back with Stan Harley, the Harley Stock Market Letter. Please continue, my friend.
Absolutely, Larry. I was really intrigued with your comparison to 1929. You pointed out a couple of things, that the initial rebound off that first trading cycle low was 8 trading days, and then it turned south. In 2022, off the January 2022 high, the market fell 16 trading days, rebounded 8 trading days, and then it went down from there. My guess is, in looking at this chart, you can see 3 moving averages I put on here. The red is the 200-day moving average, the green is a 15, and the blue is a 50. My sense is we're going to move northbound here over the next several days. We've got a Fed meeting coming up here in about half an hour, which I think is probably going to be a non-event. I think the market is already priced into whatever the Fed does, but I don't think it's going to be a major market mover. Nevertheless, my belief is the market is probably going to chug along higher into next week. Probably get some resistance at the 15-day moving average and or the 200-day, possibly a little bit of overthrow of that, then some sideways chop into maybe April 2nd, which corresponds with the 13th trading day off this March 13 bottom. That's also the date that's in the news a lot. That's the tariff day that Mr. Trump has put on Canada and Mexico. And if I'm right about a high occurring at that time, then it would be reasonable to presume whatever decision is made at that point, and I don't know what it's going to be, but it's not market friendly, and the market then sells off, and we go down into the next 40 trading day cycle low around the 1st of May, and that might very well be an intermediate cycle bottom as well, and we might get a more important tradable rally out of that low. But all in the context, I believe, in the bear market that's got considerably further to go. Speaking of which, I'm sorry, were you going to ask something? Oh, okay. Well, big picture. Where are we going from here? This is a chart of the S&P 500 going back 50 years. And what I've done here is I've marked all of the major bottoms of the last 50 years. Of course, the October 74 bottom, the Dow bottomed in December, but the S&P bottomed in October of that year. Then we had a low in August of 82, the crash low in 87, December 94, 2002, 2009. Those dates are probably familiar to everyone who follows the market closely. Well, there is a recurring pattern here. And when I put all of these dates into a spreadsheet, it turns out there's a cycle of 82 months. And that cycle, the half span of that is the 41-month cycle that I've shown on the air here on a number of occasions. That 41-month is a little more variable, but clearly you can just, with the Mark 1 AI ball, you can see a very regular recurring pattern of lows every 82 months with a standard deviation of 6.8 months. And my analysis points to the next recurrence in this cycle for the May 2029 time period, again with a standard deviation of just under 7 months. So I think, boys and girls, we're headed southbound into May of 2029. What does that mean? I think we're going into a meat grinder of a bear market. That's what I think. It won't be straight down, of course. There are going to be intermediate trading cycle lows and intermediate cycle lows along the way. But generally speaking, I believe the trend is down into that next 82-month cycle bottom.
Wow. Stan, we have a question from one of our listeners, and it's a tough one to ask. If you had to put the odds on a market crash, what would you put the odds being?
Yeah, that's not an easily answerable question.
That's why I'm going to let you answer it.
We should ask the good-looking man on this interview for the answer to that one.
Gotta get your eyes checked.
I don't have a number. I think we're going into a protracted decline. It's probably going to shave a very high percentage off of this. It's a little early to put numbers on it. I have some ideas in mind, but I'm more focused on the timing aspect than I am on the pricing aspect. A crash almost implies a quick and dirty, although we had the crash in 29, and we went further south into July of 32. By the way, that decline from September 1929 into July of 1932, it went down exactly 34 months. Fibonacci number again. What about the current environment? Well, if you go down to May, June, July of 2029, you're looking at probably Fibonacci 55 months down.
Wow.
And that's where I think we bottom. These fib numbers tend to show up all time frames, all markets, all the time.
Wow, that's great.
We got a little bit of time here. I thought we'd shift gears.
Please do.
I've talked about this in the past, but perhaps some viewers weren't on the air at that time. Let's look at home prices, a subject near and dear to most of us. I pulled this data from the Fred website. This is the Case-Shiller home price data. Each of the data points are monthly data points. In this case, I've got the data plotted going back to for the last 50 years. And the data points plotted in blue are the monthly bars as reported by Case-Shiller. And the red is an 18-month moving average. And very simply, a buy-sell signal is rendered with the monthly price bars in blue crossing either above or below the 18-month simple MA. And as you can see, a buy signal here where my mouse cursor is, a sell signal here in 2006, a buy signal in early 2012. And the monthly price bars, although they kissed the 18-month MA, they didn't break below it yet. So technically, we're still on a buy signal. However, take a look at this below. What I've done here is I have computed the price velocity, the rate of change, with a look back of 8 months, 16 months, and 32 months. I plot all three on the same graph. And as you can see from the waveform, the amplitude hit a very high level in mid-2022. And with the top that occurred in July of 2024, look at the progression to the downside. That is classic divergence. Put another way, this thing has run out of rocket fuel and the dots are still heading southbound. So I believe home prices have peaked. They'll probably pick up speed in the coming months. But if you're looking to buy a house, I would think that now is not the right time. If you just be patient, lower prices are coming and you'll get your chance.
Wow. Hey, Stay tuned, folks. Stan, thanks for joining us, buddy. We'll have you on again in a few weeks, okay, pal?
Thank you very much. My pleasure.
Okay, we'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, this is a graphic picture of the stock market from August the 5th, a couple years ago. Let's try it last year, Larry. And you'll notice here that we had similar moves down perfectly. And you'll notice this is what we've done here. The problem is we've switched over, folks, because March has gone off, and there's a big difference. We've not moved very much at all. You can see here we only went up about a couple hundred points, which is pretty good. But look what happened here. See how it did this in one day? And then never looked back and then backed off and away it went. Well, I'm hoping that that's what happens. But folks, chance favors the prepared mind, and by golly, this thing looks flat out bearish. That's all I can tell you. It just got such a similarity to that year that everybody talks about, and so many things are equal. We have tariffs. That was a thing that started the whole depression thing, the Smoot-Hartley Act. Anyway, I don't know, and I hope it's not going to be that way. But no matter what, we're going to be all right. Hopefully, when we come out of this. But I'm just telling you that this is what I'm looking at. And remember, folks, I'm often wrong, but never in doubt. That's all I can tell you. And I'm always going to put a stop in. I'm going to tell you where I'm going to get in and where I'm going to get out. But if we take out this low right here from where we were just the other day here on the 13th, actually the low on the NASDAQ was the 10th. It was the 14th. So we're only 4 days into this rally, okay? So 4 days, and you had 2 more, 6, so that rally should be 6 to 8 days. We got the equinox on the 21st, and we all have the Bradley model at that time. I don't know. Chance favors the prepared mind, so let's see what happens. I'd be buying a put on that Friday just for kicks and giggles to see whether it's going to hold up or not. That's really what I'm going to look at, all right? And by the way, if you did the puts in the Guild GLD, they now have a profit. So keep your powder dry, and let's see what happens when the Fed gets done here, beating the drums here in a few more minutes. And we'll see you on the flip side tomorrow. I'm hoping to have Mike Moore Analytics as our guest. And by the way, I feel okay, folks. It's just that my voice is a little rough. It's colder than a gravedigger's rear end over here. Well, it's not that cold. You don't even need a super big coat or anything. But when you live in Tucson, you come over where the high of the day is 41. That's not.
Steve Rhodes